Hello my fellow freedom builders, and welcome back here to another video from the channel. Today we're gonna make another video in the series of how to learn my strategy. So I am gonna give you another piece of the puzzle today. First of all, if you haven't done already, please subscribe to the channel, like the video and so on, you know the drill, so that YouTube can see that this is the kind of content you like to see. Good, let's get to the chart. I have Facebook here, and as you might remember from the first video, if you haven't seen that one, I recommend that you do it. I'll link to it below here. But if you have seen it, you'll remember this indicator here called the CRS, the Comparative Relative Strength. In this indicator, we took for instance, the Facebook stock and compared it to, in this case, the S&P 500, so we could see if Facebook were doing better or worse than the overall market. If that sounds a bit cryptical, see the other video, I'll explain all of it there. Today we're going to look at another indicator, and that is something called the RSI. The RSI is a very common indicator. It is included in every single charting software I have ever seen in my life. So it is from the late 70s, I think, and it has been tested a lot over the years, and it works well in some ways and less well in some others. But I'll get back to that later. First of all, we need to get a little idea of what the RSI is. And I'll show you a bit of math here, and don't be running away because I'll explain it very briefly, and it's not important that you understand all of the math. It's just to give you an idea of what kind of indicator this is. I recommend that to all of my students, everybody that we talk about RSI with, because no matter what indicator you're using, I recommend that you have a good idea of how it works, because no indicator works well all the time. And if you understand the underlying math or the underlying idea of the indicator, you'll get a better idea of when and how and why the indicator doesn't work sometimes. So the RSI indicator here is defined with a little formula saying 100 minus 100 divided by 1 plus RS. And this RS is actually the important part here, because all of the other stuff here is just a way to make the indicator go between 0 and 100 basically. But the RS is a relative strength. And here is an important thing. I'll just return to the charts. When we talk about relative strength here in the comparative relative strength, as I said, we were comparing the stock to the market. Here in the RSI, even though it's also called relative strength and then index, then we are not measuring the stock towards the market or compared to the market. We are measuring the stock with itself. And I'll get back to that later. It's just important to remember that the one we had in the first video, we compared the stock to the market. And here we are comparing the stock or the price of the stock to its own past. Okay, so far so good. So here, the RS, it says here, RS is defined as ratio between average gain to average loss over a certain period of time. Meaning average gain over, for instance, n periods of 14 periods of time divided by average loss over 14 periods of times, where n can be defined by user, which I just did. Let's get to the chart and see what that actually means. What we can see here is that I use the 14 weeks period, or 14 periods. But since I'm working with a weekly chart, that means that it is 14 weeks. That's a mistake that some people do when they look at charts. They think that it's always 14 days. But if I were using a 1 hour chart, it would be 14 hours and so on. So I'm using 14 weeks here, or 14 periods. What the formula does is that it goes back 14 periods here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, I think it is. And in this time frame, if we just draw it up here, in this time frame, approximately this time frame, it looks at all the winning days, and it's looking at what is the average win, what is the average gain on these winning days, and then it's looking at the losing days and seeing what is the average loss of these days, and then it is divided by each other and put into the formula. So what that does is that when we have a good uptrend, the winning days normally are larger than the losing days. And what we can see here is that when the RSI is going up, that is exactly what the formula is telling us. Sometimes we can see that the price might be going up, but it is kind of like the RSI is actually going down, or the tops are going down. And that means that the losing days, even though the price are slightly ticking up, it actually means that the average losing days are larger than the average winning days. And what we do want to see normally is large winners and small losers. Okay, so what we can use this for, I'll not go a lot further into the math here. I might be making an RSI video on a later date, but right now it is to explain my strategy, my method here. So normally, or the way many traders and investors use the RSI indicator, is to get an idea of if something is oversold or overbought. And that is from the theory that when something has gone up too much, too far, for too long time, then it needs to have some sort of retracement, a little reversal in price. And as you can see, that is also quite well working. I put in a line here at 70 and one at 30, and that is where people normally put these lines in. And as you can see right here, we are getting a good turning point here. Might be getting close to a turning point here. But the problem is with this overbought, oversold concept, that stocks can have a tendency of being overbought for a very long time. Let's say, for instance, you got into Facebook somewhere down here at 120, and then the indicator told you to sell it at 142, because now it was overbought, and you said, now we need a retracement. Then it actually stayed up here for a very long time, and you would have had no real place to get in, because the indicator never went into oversold so that you could get in. It did get in. No, it actually didn't. It didn't even reach the 30 down here, so you couldn't even get in here. So the problem with this indicator is that you are often getting out way too early. So that is not the way I use it. I use it in a completely different way. And it is a way that not many investors use it, but it is quite effective. So I will just delete the overbought and the oversold indicator here. And I've only put a 50 line in. And the way I have put that 50 line in, just to explain that briefly, is that here in the RSI indicator, you can normally put this 70 and 30 line in both of the places here, you can see. But I've just put 50 and 50, meaning that it is just drawing one line here at the 50. So that is how I get the 50 line in easily. So what I am doing is that I say if this one gets above 50, then we are in a strong market, meaning that we are in a possible uptrend. And as you can see, right here, when this one got up in 50, we could have got in Facebook here around 165. And it actually went up, but then it turned down below 50 here, and it turned above 50 and below 50 and above 50. So we could have been whipsawed out of the market several times. And that is why I'm not just using the RSI. I'm simply using this RSI above or below 50 to indicate very quickly when I'm scanning my stocks every week. I'm just I have been giving here a brief indication as to here is a stock I should keep an eye on. So what I am doing here, and of course there are more parts to the puzzle here, but what I'm doing is that I am combining the CRS indicator, the relative strength compared to the market, compared to the relative strength index where we compare the stocks to its own past. So what I want to see here is I want to see the RSI above 50 and I want to see the stock doing better than the overall market. That means that if we just enlarge this one, that the first time we actually get a buy signal is here at 165, because that is it is above both of its moving averages here, and the RSI is above 50 here. Then you could say that the relative strength is diving down here, but that is actually not enough, because to sell a stock we would need to see both this one going below one of its moving averages and the RSI going below 50. And here we only have one of them, and that is what I call a yellow zone stock. Here, when it turned up in both of them, it was a green zone stock, and in the period here where both of them were both below 50 and below the moving averages, we had a red zone stock. Okay, so here it went into green zone. Here we had a yellow zone, yellow zone, yellow zone. We stayed in the stock. Here we had a green zone again, confirming, yes, this might be going up. This one turned down again, so we had yellow, 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 green, because now they are both above the requirement here. And we had a green, 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 turned down to just a short yellow, turned into a green again. And then here we can see the stock turning into a red zone. So if we should just keep to the rules here, we could have taken a trade here around 165, and we were sent out here around $10 above that, something about 175. Not the largest gain in history, but we stayed with the trend, and nobody knows how far this trend is going to go, if it is going up 1,000% or if it's turning down right away. But we are getting the indication quite early, and you could say, and that is some of the other pieces of the puzzle that is coming, that we might not be selling just above one of these large moving averages. But I'll get back to that later. I would actually have been kept into this stock, but let's just stick to these one or two rules here. So we are getting not really anything to buy from here. We might have gotten in here or here, but we are getting in around 190, 192 again here. And then we can see it is getting to yellow zone. This one is dipping down below its moving average, going up back in green zone, and we are kept into the stock from around 190, and in this hour we are at 222. Again, I have absolutely no idea if this one is going to 500 or 1,000, or if it will turn down tomorrow and go to 180. I have no idea. But what I do is that I follow the trend. And here we're looking at price trend, and the RSI is telling us, yes, the stock is actually strong enough so that it can keep itself above 50 here on the RSI. And we can see that we have been kept above the moving averages here on the comparative relative strength indicator, so it is stronger than the overall market. If we scroll a bit back, we can see that this has been a bit of a choppy zone. Let's just make these a bit smaller. It has been a bit of since 18 or so, it has been some choppy years for Facebook. And if you had just bought and hold here, you could have gotten in around 190 here in January 18. And then a couple of years later, it would still be around 190. So it would have been dead money to you. The money would not really have given you any profit, but you would have taken some huge losses under these 2 years. So what we could do is that we could see that we were actually getting a sell signal down here. We would have been sold out of the stock, and we would have gotten into it again here around 180. And been sold out again with a small loss. But then we would have been kept out of the stock for a long while, getting in somewhere around here again, and being maybe zigzagged a bit out, but being in most of this uptrend as well. So we could have actually have made a profit, even though it was a bit of a whipsawing market. However, if we go back and see here, this is where the trend following strategy really gives us some great returns. Because yes, we might be whipsawed a bit here and lose a few percentage now and then, but then once in a while we get into a stock where we might actually get in down here in Facebook around 30, 33. And then we would pretty much have been kept in because we're not getting any red signal. Here we can see it's diving down below 50 on the RSI, but the relative strength is still good. So we are being kept in. Then we might be sold out here if we are not using any other tools. We might be sold out in 114. So we are taking it from 33 to 114. That's a great gain. And then we are getting a green signal again here in 133. And we are being kept in up until 160 around here. So we are getting some very nice long runs here. And yes, then once in a while we take a beating, and if the market crashes and all the stocks in our portfolio are pretty much beaten down in yellow or red zone, yes, then we might take an overall loss on the portfolio of 5 or 10 or maybe even 15% if things goes really bad. But what we also see is that in the trending stocks we are making it all back. Let's have a look at some other trending stock like Apple. As you can see here, we're getting a good buy signal here. The CRS indicator is showing us that Apple is doing better than the overall market. We can see that the RSI is allowing us to buy, so we are buying Apple at 110. And we might be sold out at 150 and then getting in again quickly at 170. And that is the price for this method, that sometimes you're just getting kicked out of a trend. That's why I have more pieces to the puzzle. But we might have been sold out here around 150 and getting in around 170 again. Then we would have taken this large run up. The trend is starting to turn here, so we would have been sold out around 185. And then we would have been kept out of the stock up until here, where we got in again at around 200, and we would pretty much have held it up until now at 318. So these are the uptrending stocks, and it is always easy to find an uptrending stock where some trend indicators are showing bought and sold. But let's see, have a look at another stock, General Electric, to show what one of the real strength of this method is. Because the General Electric is a stock that many praised as some great stocks, and everybody should be in this one. But if we look at this one, we are starting to see General Electric getting sell signals here, around here in September 16, where the line here, the relative strength compared to the market, shows that now the General Electric is not really a good stock to own anymore, and the RSI is tipping below 50. Then we might have held it because we said, well, there is a bottom here, and we might see, and it retraced from this one, bounced up, and but we kept getting these sell signals here. It goes below both moving averages again and below the 50 in the RSI, and we started to seeing them lower tops and lower bottoms, and we would, no matter what, have sold out here around 24. And then we would have been kept out of this stock. You can see both indicators are showing this is a lousy stock to be in. We're starting to get a bit of a trend signal here on the RSI, but the relative strength still shows us not really worth owning. But then all of a sudden, even though General Electric had been judged out and everybody said it was going bankrupt, including me, I thought there was some fraud going on. But right now it actually seems like it is an okay stock. We got a green buy signal potentially here in October 19, and we could have bought somewhere between 10 and 11, and right now it is up around 12. So right now it is actually showing that the General Electric is in an okay trend, and it could be possible to buy it. I might not, because I have some other criteria that need to be fulfilled, but just from this red and green zone, you can see that this is a buy. And as you can see here, every single week I'm making this for myself, but also my Danish subscribers. I have this Danish subscription area, but I am making this schedule for myself, showing, for instance, here on the US market, I have all the S&P 500 stocks, and I am marking these with green, red, and yellow as the three zones. Green is when both of the indicators here are showing a buy. Yellow is when one of them is showing a buy and the other one is showing a sell. And green, for instance, at the Atlee, is showing that both of them are, red is showing that both of them are below the lines, and hereby tells us that we cannot longer own this stock. It's not that we just need to buy just because this one is green, but when we are considering a stock, it could be from fundamentals, it could be from something on the daily chart, it could be that you are a swing trader or something like that, then personally I would never ever consider a stock as buying a stock unless this one is green, so that both the indicators are showing buy here, and then you can put on some other criteria. It could be that we went to the daily chart here, here at the daily chart, and you could put some sort of technical analysis in here, or you could look at moving averages, or you could do whatever you want to, but I would never consider owning a stock that was not in the green zone here at the weekly chart. I hope that made sense. Otherwise, below the video here, just post your questions or your comments. And please let me know if you use this indicators already, what your experience is with them, or if you use them in a completely other way. I'm always open for some inspiration, and you might have found something that works even better than my strategy does. But this one I have been using as a base of my buying and selling stocks for the last many years, and it keeps me in the long trends on the weekly chart, and it keeps me out of the big crashes, both in stocks and in the general market. So it is very simple, and it is something that everybody can apply. If you haven't seen the video, as I mentioned, about the CRS indicator, I'll link to it below. If you haven't done it already, please subscribe to the channel, like the video, and hit that little bell notification so that you will be sent a little message next time I post a video. That happens 2 to 3 times every week. I hope this was a good information and inspiration for you, and I'll talk to you soon. Take care of your money out there. Bye for now.